Do you want to share? I guess I have to share my screen, huh, Arielle?
Go ahead. Yep.
I'm in charge today.
Well, thank you everyone for being here. If you want to keep your camera off, that's okay. If you want to keep yourself muted during the presentation, that'd be great. I will be monitoring the chat, so if you have questions or comments, feel free to throw them in there, and we can either just address them or you can unmute yourself and we can talk through it. We have some really good information for you today. We kind of switched up the how we're going to be doing it, how we're going to be presenting the data today. So it's a little less data and a little more talking points and kind of our take on it from a new construction perspective. So we hope that you find that relevant, interesting. You have some good nuggets that you can take away and share with other agents as well as, clients who wouldn't know these things.
Yeah, exactly. So the main point here is that we saw a lot of behavior and changes and everything in the market over the last 6 to 12 months, what's going on right now, and what we think is going to happen in the future. That we wanted to really make sure that this information is getting out to you guys, getting out to the clients, because we're seeing a pattern of where the agents, you guys, don't do the same volume sometimes as what we do as far as appointments go, because we're just set up to take in a lot more traffic. And so we see patterns a lot earlier. Then you guys start to see it usually about 2-3 weeks after we do, at which point it's probably the same, but lately with this market, who knows, it could be different already. And then it's like 2 whole months before the clients start to react to the change. And by that point, it could be very different for them. So we want to make sure that they have the best information. If you guys have any questions along the way, we are happy to answer them, but we're also posting this to YouTube, so you can also comment on YouTube and let us know if you have any questions. This is going to be very relative to this particular location, this particular time frame. So we are in the Raleigh-Durham area of North Carolina, and this is specific to the now, looking forward, and specifically the last 6 to 12 months, starting from August 2023.
Yeah.
Yes. Okay, so I'm going to share my screen. Then we'll go into presentation mode.
Perfect.
And we'll go backwards. Okay. So obviously we got to start out with our beautiful faces and our contact information if you need anything from us. Okay. And then today's agenda. Arielle?
So we're going to be talking about data sources and perspectives, where we got the information from, then move into how what the impact is of new construction on the market and vice versa. We'll talk about data from the last 6 to 12 months, what's happening right now, and then looking forward to the next 6 to 12 months and our long-term expectations.
Perfect. Okay, so what data are we talking about? So where did we get this from? What are the parameters? So we've started mostly with MLS information. So pulling from about a 300 price point to a 650K price point, because most of our homes are going to be sitting in those ranges. Wake, Johnson, Durham, and Harnett. We are sold out in our Durham community, but we do think it's relevant to look back over the last 6 to 12 months over that, because we get people who want Durham and maybe they don't realize what the situation is in Durham to their specific needs. So we're going to be specific to our submarkets. So submarkets is where we have a home. So where we have our communities at. And so we look at data super specific to Angier, for example, if we're sitting in Angier or Benson or Clayton. And then our upcoming ones. So for example, Benson would be one. Nightdale would be one. These areas that we're going into, but we're not quite there yet. We're also pulling data on that. So we're looking at where we currently are, where we're going, and where we think we're going to go. So that's key as well. We're also looking at data at possible opportunities in the future. We're going to look backwards 6 to 12 months and forward as much as 5 years. Going past 5 years, you're really just kind of guessing at that point. The data gets a little tricky. So we look forward as builders. And then the whole idea of follow the builders. The reason that people say follow the builders is because we do so much data probing and we look at so much, we look into the future. Generally, by the time you have a group of builders going to an area and really developing a newer area, there's been a lot of money and time invested in making sure that that's going to work out. Okay, Arielle?
So what impact does new construction have on the market? So the first one is going to be interest rates, and this is kind of a chicken and egg situation. When interest rates change, the builders will react accordingly, which then impacts how new construction impacts the market. When do builders start thinking about inventory being delivered to the market? So we'll talk about this later, but builders are very strategic on planning when they release certain lots for pre-sales, when they start certain inventory homes, and when those are going to be delivered to the market. End of year inventory purchases. Why are specs so valuable to builders in the last 6 months of the year? We'll also talk about what the difference is about a builder's approach to listing their homes. There also is a big piece of them selling as far as like incentives, price reductions. Why do builders do that, and how do they decide when it's the right time to do something like that? We'll also talk about competition to sell. So how new construction does their listings based on what's happening in the marketplace at that time. And what happens when the inventory is gone? Did builders continue to build at the same rate? What is going to be the future look like for that?
Okay. So first, obviously, we all know that 2022 is a roller coaster when it comes to interest rates. The thing I really want you to look at here is at the end of 2022. So from about May into September, and this is when you really started to feel it increase into the end of 2022. And this is what is going to have impacted so much of why builders did what they did in the last 6 to 12 months.
Mm-hmm.
So the reason being, how early do builders start to plan an inventory home? So generally, the shortest time frame that we can plan on a home taking from paperwork to construction to actually completing it is about 6 months. So when you're looking in June and you want more closings for the year, then you have to start looking at inventory homes if you've got a mixture between the pre-sales and the completed homes that we price out and we offer as inventory homes. So we start looking at that in June. Based on the information that we just went over in September, they would have already been starting the process of a lot of those homes. Now, they would have been somewhat aware, interest rates are kind of tricking up. We've been in the 5s, but this impact of going up into the 7s, they would have already made their plans at that point. So going back over here. So builders, we're going to look at not just the sales we make and the closes, but the starts. This is huge.
I feel like the seminars is really like for...
Hold on one second. You're not muted.
Oh, well. Sorry.
Did you have a question or were you just talking?
Just talking. I'm so sorry to go.
You're fine. I'm going to mute you, but you're welcome to ask questions.
Okay, thank you.
Okay, all right. So we track sales, starts, and closes. So this is huge. We do this at every single quarterly corporate gathering. We do this at every single monthly gathering of the Raleigh team. And we talk about it even on the sales side at our sales meetings sometimes. Starts are huge because starts indicate when we can actually close that home and if we're staying on track. So that's why that leeway time. And so we're going to be planning in June for final opportunities to close in the same year.
Think about builders' plans, especially for inventory homes, like your plan as a real estate agent. Okay, I want to make X amount of dollars this year. What does that mean for number of closings? What does that mean for number of clients? What does that mean for number of prospecting calls? Builders are doing the exact same thing. If we want to make X amount of money this year or close this many homes this year, okay, how many inventory homes are we going to do? How many client sales are we going to do? And then work backwards as far as what does that mean on a calendar basis. And some builders are going to be more cyclical feeling than others. At True Homes, we tend to be a lot more flatline, meaning we don't have huge peaks and valleys throughout the year, but there are some builders who do that. So it's good to just be aware of that.
And typically those cycles would hit a valley in the wintertime where there's not as many quick move-in homes in the wintertime, and they move right into a cycle where most people are buying for builds in the early part of the year. But what happened last year with the interest rates upset that a little bit. So why do builders care so much about closing dates, Arielle?
So good question. There's a lot of reasons why builders care so much about closing dates. And really this is all based on how they're going to be running their business. So first and foremost, larger builders, we're not talking about the small, one-off custom builders, but any larger builder is going to be taking out construction loans on behalf of the clients. And if you have ever had a client trying to get a construction loan, you know that they're very different. With large builders, we're typically only paying the interest on the loan, and then we carry that throughout the entire build process until the home closes. So what does that mean in terms of carrying costs and closing dates? Well, every day that we carry that home is another little interest payment that we are accruing for that home specifically. And when we carry those homes especially into another month or into another year, the carrying cost impact can be quite significant. So that's why you'll see a lot of builders, if the closing date is right around the end of the month or early into the next month, they're going to do what they can to pull it into the current month because of those extra carrying costs.
And it's not just that one house. So sometimes we get the question like, it's just this one house. Why can't you just make it work? Mm-hmm. And it's because if we do it for one person, we have to be willing to do it for another and another and another, and it can snowball into a lot of houses costing a lot of money.
Very true. In addition to that, there are tax incentives for not carrying homes over, into the next year for sure. And that's why you'll hear builders talking about getting off the book by year end. Most builders' fiscal year ends are going to be between October and December. So that is around the time where you'll see a lot of finished inventory homes hitting the market. That's when you'll typically see builders, doing incentives or doing kind of like special offers on those homes, because they're trying to get as many closings in before the end of their fiscal year, which is around that time frame, and get those homes closed and off the books. So, I always tell agents, I was like, if your client's just really looking for a real good deal and they're okay with, moving or closing around that time and maybe moving around the holidays, that's really when you can get a good deal on a quick move-in home. So something to think about.
Right. And so knowing which builder has which year end is going to be impactful for you. So developing those relationships with your on-sites is huge, because if somebody's fiscal year is in October and that's when they have the best deals, but then you tell your client for that particular builder to wait until December, it's going to get better, and then it doesn't, that impacts them. So just knowing that kind of information is huge. So I'll let you take this one, Arielle.
Okay, so last year, with the interest rates being what they were, basically what happened was they, builders had been selling super, super well. They had all these clients in backlog. Well, as the interest rates started to tick up, some of those clients were no longer able to purchase the homes that they were under contract for because of the payment, because of the higher interest rate. Maybe they had some sort of job loss, or, they're not certain where they're going to be at financially. And so a lot of builders saw very, very high cancellation rates. And that's what led to a little bit of I hate to call it a flood, but it was a much higher tick up in finished or almost finished inventory homes that you saw at the end of 2022. And maybe you as an agent experienced this as well. But these are just some headlines that I found from some of the major builders who had extremely high cancellation rates, a lot of them over 20%, some of them over 30%, which made a huge impact on what happened at the end of 22, but also is going to have a significant impact on how builders think about 2023.
Right. And one of the really important things to note when you're looking at these quotes is, like, let's look at Taylor Morrison down here. They went from 6%, which is incredibly healthy, by the way, to 15.6% year over year. So there was a significant impact on these builders that they were not expecting. Mm-hmm. So how are builder listings different? What do we do differently in approaching our listing? So it's definitely not emotional. Maybe with some of your smaller ones, they're thinking more of it as their home. But when we are doing these larger volume, when builders are doing that, it's not emotional about that each and individual home. It might be like a connection to the buyer. They really want the buyer to get the home. Don't forget that does happen. Like, we are invested too. But ultimately, the decisions are not emotional. It's going to be based on profit and margin. So they already have a number in place. Doesn't mean that the on-site salespeople know what it is. So we get that question all the time. Like, what's your absolute bottom? I have no idea. They intentionally aren't going to tell us that, right? Because we're out here trying to make all these deals happen. And so they want to protect their financial bottom line. So they already know what that number is that they will not go below. And sometimes the homes are priced at that number. They're aggressively pricing them to be there. Other homes are taken into account. So, Arielle, what happens typically when we have a home that is priced aggressively to sell? Maybe it's already at our bottom line. And aside from that, somebody comes in and they offer us $50,000 under the list price, and we still have another 20 homes in that neighborhood to sell.
Yeah, that makes things a lot more difficult. So unlike a resale home where you're only trying to sell that one house and, you know, obviously you're taking the market into account, but it doesn't have as big of an impact. Depending on where we're at in that neighborhood, if we have several other homes for sale, well, we can't list a home that's 3,000 square feet for 50K less when we have one that's 2,400 square feet at the same price. So all of the future of the neighborhood and what we have available for inventory homes and pre-sales as well has to be taken into account when pricing that specific home.
Right. And then timing is key. So a couple different places. Obviously, the timing that we just talked about with the end of the month, the end of the year, right? But then there's also the timing of when are they listing the homes. So we'll talk about this a little bit more, but you're going to see more of a shift to that happening earlier in the process, which is going to take some of the leverage out of the buyer's hand in negotiations, because we have to carry that home for a certain amount of time to finish it. So there's not as much a sense of urgency earlier in the process, but from a financial risk perspective, it is better for the builders to list it early and go ahead and get somebody going on that. But as we mentioned, there is a bottom line. So knowing that it's not just a matter of they don't want to make it work for you, that they have to make it make financial sense, that usually is going to help you with your negotiations.
Absolutely. And it's the same for resale too. You know, every client who's trying to sell their home has to take into account, well, I still owe this much on this house and I need these funds to buy my next one or pay off debt or what have you. So there's kind of some similarities there. The other thing that builders have to take into account with other homes on the market is the competition. So all builders do competition shopping, figuring out, okay, so, you know, we're located here. What other new construction neighborhoods are around us? What other communities would a client who's looking at us also consider? And that can have a big impact on how the pricing is. If you are, you know, the first, we're going to be one of the first large, or we will be the first large builder in the Benson area, we're going to be the ones kind of setting the standard as far as what price increases look like and what pricing looks like. Whereas if you're in an area that has a lot of competition, maybe like Fuquay, you're having to take into account what a lot of what the other builders are doing, what they're offering. Are they in closeout? Do they have a lot left to sell? A lot of those dynamics play into this as well.
Perfect. Yes. So that leads us into incentive selling and price reductions. So this is a lot of what was going on when there was a lot of inventory on the market. And in a minute, we're going to get into reviewing all of that data. But this is how builders were able to get stuff across the line, because again, they didn't want to carry it into the next year or even into the next month. So it was a calculated risk from builders to either reduce their pricing or start offering incentives. And it was all in effort to make the homes more affordable and react to that slowing of the market when the interest rates started to go up. And price reductions were due to the abundance of inventory in specific areas at specific time. So sometimes clients will come in and they'll say, oh, well, the prices are going down. They're going down, they're not going up. And I think we all kind of know that's not true, that there is still a price appreciation, just at a slower rate. And so knowing that those price reductions were very specific. So Arielle mentioned looking at all the comps around you. We may have had price reductions or incentives in one area, but not in another. And it just depends on that specific market. And so it was a correction to address the specific rollout of inventory from builders at a specific time. So it wasn't a market change so much as it was a correction, and created an atmosphere inadvertently of a new buyer's market, but that was for a short period of time. There was actually enough months of inventory in certain locations at certain times to call it a buyer's market. It was over 6 months of inventory. But that rapidly changed once all of that was purchased and moved on, because there was a sense of urgency from us as builders in the industry who just had everything available all at once and then needed to work through that.
Mm-hmm.
All right, so talking about competition to sell, Arielle.
Yeah, so competition to sell. So obviously builders must sell their homes, you know, whether they're going to sit on it for a certain amount of time, whether they're going to reduce the price, whatever the case may be, there's no option not to sell, unlike with a resale home. You know, the client could decide, well, maybe I'll just rent it. Well, maybe, you know, I'll have someone move in with me and I'll just stay here, you know, whatever the case may be. We don't have that option. So some builders will even drop projects, they'll put them on hold if the competition in the marketplace isn't working for them. And then on the resale side, you know, maybe there's a reason why less resale homes are hitting the market at that time. If the interest rates are really high and they feel like they can't get into their next home affordably, or if they're worried about the market in general, they might be more hesitant to sell. And so this all also contributes to the importance of agents' ability, whether the market is super, super hot and, you know, things are going super fast and clients need help being able to snag that home before somebody else does, or the market is slower and it's harder to find what they're looking for or harder to make the financial aspect work. Agents are always going to be very important in their ability to help their clients, regardless of what the competition looks like on the market.
Right. And this is going to be hugely important when it comes to contingencies. So what's interesting is we were in an environment where it was moving so quickly that nobody was taking contingencies. Then we slowed and people were definitely willing to take contingencies and work all kinds of deals out to make it happen. Now we're getting back into a market where it's speeding back up again, but a lot of the people who are in the market have a home to sell. So it's this situation where as we go back into a seller's market, the builders and the sellers may not necessarily need to take the contingencies, but there's a whole lot of buyers out there with them. So that agent's ability to make those two sides meet, to come up with creative solutions, to really advocate for their client, that's going to be huge. That's where you're going to win over for a lot of your buyers and sellers. Okay, so what happens when the inventory is gone? So starting up here on the top right, there's still a structural issue with affordable housing. So there's still an issue with supply and demand. Eventually that inventory that drove all this to feel more like a buyer's market will be gone. And so once that's gone and there's still an issue, we'll have price increases because there's going to be higher demand than there is supply. So incentives will then start to back off, go away, or only be available on certain homes. We're going to have a constricting supply again as we have less homes hitting the market. We'll talk a little bit why we'll have less homes hitting the market in a little bit. Sellers market behavior returns, and then we start back over with a structural issue. So it's a cycle. We're going to keep going in this cycle for a while until we deal with the structural issue of affordable housing. Okay, give my chart a minute to stop freaking out. Arielle, you want to talk us through the last few years, specifically the last 6 to 12 months of supply?
Yeah, for sure. So if you're looking at this chart, there's different color-coded lines for each of the years. So we'll start with 2020 because that's obviously the most dynamic line that you'll see on here. So if you're looking at February of 2020, you can see that inventory in the triangle or in this area was around 5.5 months. That's pretty much what we were at previous to this. I'd say most of the time, depending on the market, you were around 4 to 6 months of supply, which was pretty healthy, I would say, for the Raleigh-Durham market. But as COVID hit, our months of supply has never gone up past about 3 months of supply. And so you'll see, you know, both of the 2021 and 2022, or I'm sorry, 2021, that line remained extremely low, the lowest it's, you know, been in all 4 of these years. And then in 2022, as the interest rates started to increase, you can see how that line slowly ticked up from a half month supply to 2.5 months of supply. So in 2023, as we sold out or as builders sold out of that inventory and people are getting more used to the new normal of the interest rates as they are, you'll see that now month supply has started to tick back down to about a month and a half in general. And so that's probably about where we're going to be, I would guess, for the rest of the year. And builders are going to be more reliant on pre-sales or client builds in versus the quick move-in homes that you might have been seeing in the past. They're going to kind of hold back a little bit and see how the market is doing before putting a bunch of inventory out and, you know, hoping that it'll sell.
Right. And I think an interesting point too is this intersection of all the years between June and July. It's showing you that it's kind of normal in the summertime to have that amount of inventory based on the post-COVID situations, right? So what's interesting about this is that 2023 hit that same level and intersected and is declining or staying kind of flatlined around that level, whereas last year that's about the point that it started to incline. So we are not in the same position that we were last year. All right, we'll give this one a second to settle. So what we're trying to show you here with average age is a couple things. So you're seeing a steep decline between July and August, but that's also because we're at the beginning of August. But in general, you're seeing the purple line 2023 stay well below the 2022 for sure and 2021 lines. And 2020 was significantly below that. And this is the average age of homes on the market that are selling. What this is indicating to you guys is that it makes sense that in 2020, when things started really taking off, that a lot of people did not list their homes. They were unsure about COVID. The only real source of inventory at that time that was steady was the new construction, which is why you're going to see an average age lower than everything else. 2022, a lot of the resale stuff started hitting the market in 2021 and 2022 because people felt good about the market and they wanted to go ahead and get things going. And then 2021, you're seeing that come back down again. This is usually an indication of a larger market share from the new construction side. I went ahead and all this data that we're pulling, I pulled all those transactions and I divided the amount of them that are new construction by the overall number of transactions over the last 12 months. And that put new construction at a 35% market share. That's pretty significant, especially because I think even taking into account that the national average is elevated right now, we are above that national average. I believe that national average is around 30%. So Raleigh-Durham, the Triangle area, is doing more new construction. And the next slide that Arielle will tell us about, the average price per square foot, kind of shows that as well.
Yeah, absolutely. So again, the lines for 2020 and 2021 remained pretty, not stagnant, but pretty flat line, maybe slight increase towards from the beginning to the end of the year. And you'll see 2022, that number again was following the same trend up until the end of the year. Well, what happened, obviously, we've been talking about it, all that new construction inventory hit the market and overtook the amount of resales, because typically at the end of the year, new construction is going to make up a more significant portion of the market. People are less likely to list their homes around the holidays. It just is what it is. So that massive jump in price per square foot accounts for that extra new construction inventory. On average, new construction typically is priced about 15% above resale homes, depending on the area. So you can see how that would have had a higher impact on your price per square foot. Now moving into 2023, we've kind of hopped back down because new construction is, a lot of those homes sold out. So now we're back to probably our 35% average market share and is starting to trend up again. But as you can see in June, it had a huge increase, and in August as well. Again, just showing that maybe the amount of new construction that was on the market at that time really overtook the amount of resale for whatever reason. And that's how it had that impact on the price per square foot.
Yep. Okay, so where are we today? That's kind of like the last 6 to 12 months. So what we've got here is more data on all of that. So what I really wanted you guys to see, most of the charts we've been looking at have been from this section that we use down here. But this right here talking about price bands, it's going to start with August, then July, June, and May. So when you're looking at present reality, you kind of have to look backwards a little bit. So we're going to pull August data, but we're also going to pull the last 3 months. We always pull at least 3 months to make sure we're getting more of a trend instead of just a random spike like you saw in the last one. But here's what I want you guys to focus on, the year over year amount. We were seeing numbers upwards of 200, 300% at the beginning of the year for the change in inventory, the change in month supply. Now we're seeing that like a more affordable homes, 300 to 400K, is down 35% year over year. So this time last year, when things started ticking up as far as month supply, when interest rates started ticking up, we were 35% higher in the amount of inventory that we had than we are now. So it's just something I wanted you guys to be aware of with that. And then also just looking at the month supply. So June 2023, 1.75, and we are coming down in August. So that's also on a downward trend. All right, so looking forward.
Yeah, so for the next 6 to 12 months, so first and foremost, interest rates are not likely to go down significantly, but we do have an election coming up, so it's hard to really predict. Sometimes things get a little crazy during election season. Also, demand is to remain high, driven by first-time homebuyers, relocators, and sellers using the home equity to pay down debt or to, get into their new home. Inventory is going to be constricting due to increased amounts of pre-sales, sellers selling inventory early, those kinds of things. That is one thing that month supply and what MLS listings don't always take into account is builder pre-sales, which may or may not ever hit the MLS, and then it therefore isn't accounted in month supply. New communities openings may experience a lull across the industry, especially if builders decided not to move forward with certain projects or are delaying them for whatever reason. So you might not see as many new communities coming online. And then prices are likely to continue to rise, but at a more realistic expectation and a more predictable rate versus what we've seen back in 2020, 2021, and even last year. And clients, unfortunately, will continue to be priced out of the Raleigh-Durham area if they cannot, if they continue to wait. So we always say, like, the best time to buy a house is yesterday. Even, when things were crazy in 2022, at the end of the year, someone could have snagged a really good deal, but now the amount of inventory that's back on the market again is decreased. So their options are going to be a little more limited than maybe they could have been 6 months ago.
Right. And these areas that people are like, oh, well, I'll go to Anger now that I can't find anything, I'll go to Anger. Well, Anger, what we were selling 2 years ago and now has doubled. Mm-hmm. So it's just one of those things that people are going to see more and more of. So the whole drive to qualify, yesterday was the best time to buy. Like, these sound like cliches, but they are real. Okay, so I'm going to let you take this one, Arielle, just because I can't see the top side of my presentation screen.
So this is for permits for the last 3 months on average, as far as builders pulling permits for new construction homes. And we have 3 different colored lines here for Durham, Johnston, and Wake County. The first and foremost thing that I always want to point out is how low Durham County is compared to Johnston and Wake, especially compared to Wake. Durham County is, I would say, just as sought after as Wake County is. But unfortunately, the municipalities in Durham have made it really challenging for builders to build there, and just finding land that is affordable enough to be able to build on has become an increasingly difficult problem. So you'll see that trend is always pretty low, but in general, you'll notice as we got into the end of last year, because of the high interest rates, or let me back up a little bit. So around the mid-time in 2022 is when you saw kind of a spike in permits being pulled. Now, keep in mind, permits are normally pulled anywhere between 1 to maybe 3 or 4 months after the sale or inventory home has occurred. So that's where you see that spike, because we've been running off a very low inventory. once the interest rates start to tick up, that's when you'll see a major decline in the permits, just because builders are more hesitant to put the inventory on the market, and buyers at that time would have been more hesitant to do a pre-sale option.
Right. And so the key point to ask yourself is, do we think that anything has significantly changed June or maybe April through June compared to December that would make a lot of these national large builders, who are the ones who are driving a lot of this? True Homes is an exception in that we're a large private builder. But do we think they would change their behavior? And being that they tend to be reactionary and they tend to be conservative, with all of the spikes up and down, we've seen similar behavior. So basically what I'm trying to get to is the inventory is not likely to be there at a high level at the end of the year. So long-term expectations: structural housing crisis due to affordability crisis and land and market constraints. So we have specific strategies to create solutions. And not all builders have sat down and done that, by the way. They have to have done it at some level, but are they doing it with the focus of affordability, or are they doing it with the focus of profit? Lack of inventory due to underbuilding for more than a decade is why we are going to continue having this problem. It's not just what happened this year, what happened last year. This has been a problem for a while. Sustained demand due to job growth, relative affordability compared to national levels, and economic diversity is going to drive that supply, that demand. So we've got an issue with supply, you're going to have high demand, and we're going to be scaling up in the Triangle area especially. So when you see all these builders really investing time and money, it's telling you something. So talking about the affordability crisis, Arielle, why don't you go ahead?
Yeah, for sure. So what we did was we actually drilled down to the price bands like we saw on a previous slide, but specifically for the 100 to 200 and 200 to $300,000 price bands. So affordability is an issue across all price bands in the Triangle, but specifically for these ones that people have maybe been used to buying, homes for sub 300 in the Triangle area in the past. However, year over year, we're seeing that is becoming even more and more diminished, and eventually may cease to exist at all. So right now, month supply for the 100 to 200 price band is like a third of a month, which is down over 66% year over year. Eventually, like I said, these price bands will pretty much cease to exist, except for maybe like land or like deteriorated, dilapidated homes.
Right. And so another way to look at this that I think is really impactful to clients, because we don't talk about this very much, is absorption rate. So absorption rate is where you talk about the same thing you're talking about with month supply, but what you're doing here is you're taking the amount of listings divided by the average number sold over the last 3 months. So I just did that math, and for August, that would put us at a 95% absorption rate. What that means is, of the homes that are currently available, we are expecting 95% of them to not be available by the end of the month. So this is a pretty significant problem for people who need to be in these price points.
Mm-hmm.
All right, and so underbuilding. So this is one of our favorite slides. You may have seen it before. We love it. We will continue to use it because it drives home a really serious point. So these are all of the residences that have been built in the nation, including rentals, apartment complexes, stuff like that, by decade. And so typically we would build about 20 to 27 million in every decade. From 2010 to 2019, before we got into an even bigger housing crisis, we built about the same number that we built in the Great Depression. So we underbuilt homes like crazy, and now we're still paying for it. So even if none of what happened over the last 2 to 3 years happened, we would still have a problem with housing. All right, you want to talk about jobs, Arielle?
Yep. So Raleigh-Durham total employment trends. The biggest thing to take a look at here is that each line on the chart is a different color, represents a different year throughout the 12 months of each year. So 2022 is the gray line, and that's the one that's on top. So you can see if you look at all the colors of the years, each year Raleigh-Durham trends upwards in total employment. So when people say, who can afford these homes anymore? Well, luckily, we're in an area where not only do we have a lot of job growth, but the amount that people are getting paid for these jobs has been trending upwards as well. So that's how we are bringing so many people into this area, is because the employment is there for them.
Right. And so this is just something that we've shared a few times before, but based on census data, this is where people are saying that they are moving from and moving to. So let's start with the U-Haul chart. All the green areas are where U-Haul is tracking that more U-Hauls are going into, and the red areas are where they're coming out of. Now, based on the last couple of years of the market, we all kind of knew this. We all knew California, New York, you know, your Northeast in general, kind of starting to creep, not quite the Midwest. Those areas there, a lot of people moving down into the Southeast. And so you see it over here too with North Carolina and South Carolina's placement as in the top 5. And this was actually a few years ago based on census data for in-net migration. What we found really interesting was this chart over here, and this is where people self-selected where they were coming from. And we were surprised because we thought the top options would be New York and California when they were Florida, Georgia, and South Carolina. So it's just something to be very aware of for your clients, but also it's going to be interesting when we're looking at some affordability information that is also pointing out to you why people are continuing to move here in droves. So it's this one. So what this is how much money per hour would somebody have to make to be able to afford the median area rentals or homes. I think it is geared towards rentals. This is really cool. It's from the NC housing page. So if you want to check out really cool graphics, they're an awesome resource. But this right here is why, if you look at California, $42 an hour, Virginia, $26 an hour, Florida, $30 an hour. That's why they might be more likely to come to North Carolina, where it's closer to $21 an hour. Same thing with, you know, Pennsylvania starting to creep up there, Colorado, Arizona, Nevada. So these places are still more expensive for your living wage than North Carolina. And with all these jobs coming in, they can still afford to get the higher paying jobs and have lower cost of housing for now. All right, you want to talk about top industries, Arielle?
Yeah, so there's this really cool article that Nicole found about the top industries and employers in the Raleigh area. So we wanted to share this with you just so you're aware of what a majority of our clients or the people that are living in this area, where they work and what industries they work in. This is a great thing to take note of so that you can try and focus on these industries, maybe these employers, to get clients for your buyer clients. So we were looking at the Raleigh-Durham area with the Wake County area. There's a little over 1 million people that contributed to this. And so they found the top 5 key industries and the 6 major employers for this area.
Okay. So key industries are going to be professional and business services, 19.1% with 127,000 employees. And so some of your larger employees are going to be Fidelity and Conduit. Then you've got trade, transportation, and utilities at 17.3% with 115,000 employees. And you're looking at stuff like Walmart, Food Lion, Target will be the largest retailers in the region, although last year retail sales did top 21.1 billion in Wake County, and they were struggling last year, retailers were. So for them to hit that new milestone is huge. Education and health services at 16.8% with 112 employees. So Duke University, Duke Health Systems, Wake County Public School System, University of North Carolina at Chapel Hill are taking the larger portions of that. And the reason this is really important is because this is going to talk about economic stability. These are all the industries that would have to go down for us to significantly feel recessions here in the triangle. Government at 13% with 86,000 employees. And so when you account for federal, state, and local employees across Wake County, it really adds up. So the largest public administration employer is the state of North Carolina, which is about 24,000 people from park maintenance to tax assessment. And then leisure and hospitality at 9.1% with 60,000 employees. And that's billions that people are spending when they're visiting this area. So I don't even know how to say it. Lewin food system. So where you can go get a Mountain Dew at fast food, that's where that is. Concord Hospitality Enterprises and PNC Arena are some of the largest employers. So I'll let Arielle talk a little bit more about some of the other large employers in the area.
Yeah, so those are the key industries, and then these are the 6 major employers that employ more than $100,000 workers. Sorry, employ more than 10,000 workers on average. I have not had my coffee this morning. So first and foremost would be Duke University and the Duke Health System. I mean, I know Nicole and I have had tens, if not maybe 100 clients at this point that we've talked to that are employed by Duke University or the Duke Health System. So that is definitely the #1 provider of jobs in this area. And we actually have the #1 healthcare for hospital for children in North Carolina as well. Second is going to be the state of North Carolina. And so they obviously are tending to our residents here and working for them. Next is going to be the Wake County Public School System. Again, I feel like Nicole and I, every other client we talk to is somehow either was a teacher or is a teacher now in the Wake County Public School System with 17,000 employees. And then after that is going to be Walmart for your retail trade at almost 17,000 employees.
There's more.
Lastly, yeah, and then the last ones are going to be University of North Carolina, Chapel Hill, and lastly, Wake Med, which is also a top employer. And so while you might say, Walmart, that's a lot of people who are like cashiers, stockers, maybe people who may or may not be able to afford a home right now. A majority of these employers are teachers and government employees and healthcare and hospitals, which are very well-paying positions, exactly the kind of people who are looking to purchase here.
Right. But also the people who are going to be a little bit more limited if they get priced out. So these are going to be the people that have more stagnant pay increases. So if they can afford it now is their time, right? Mm-hmm. Because we don't want them to get priced out. So how do we do things differently looking forward? Big one, affordable price points and new locations. So this is our new map. So we are going to have a community in Nightdale. It's not released yet. So I would love to help you with information, but we don't have it yet. We have Copper Ridge and Flowers Plantation. That's what you see, the 3 over there by Archer Lodge. We have sold out of the crossings at Flowers Plantation, but we do have North District at Flowers Plantation coming, which will be on the waterfront and is going to be like mini North Hills in Clayton. Then we're going to have Benson. We have 2 homes that are currently available there, and we're going to have another 160 or so lots coming and other homes in our current community as well, but where we will have pre-sale opportunities. This is what Arielle was saying. We are going to be one of the first large-scale builders going down to the Benson area, and a lot of people don't realize how convenient it really is to everything because it's off 95 and 40. So it's about the same distance as a place like Andrew, sometimes even Clayton, to different things around the triangle because of its access to the highways. And we're going to be focusing on Nightdale and Benson, and also our new Lillington community that's coming in the 350 to 450 range. And our new townhome community over in Clayton is going to be also kind of in the low 300s and up into the 4s, possibly 5s, and some of those end of the community opportunities. We have a couple homes left in Willow Spring on the Wake County side. We have a couple homes left in Andrew, and we're going to have a continuation of Tanglewood in Andrew. As of right now, we've got homes that are in the 390s in Andrew, but we will have some opportunities in the maybe mid or low 3s moving forward out there. And then we are finishing up our community in Fuquay with 4 home sites left and 2 quick move-in homes left. And those are generally going to be 450 to 650 over there. But you're going to see that we are moving south, we are moving east. This is where the land is affordable, and this is where we have to keep going further out. We're also going to be looking at places on the north side, as well as around Sanford, Pittsboro, stuff like that, but that might just take a little bit longer. So as you're trying to look for affordable areas, it would be stuff like this. You want to talk about floor plans, Arielle?
Yeah, so what we also did pretty much mid of last year when the interest rates are going up and people's affordability was going down, we were like, okay, so people still need homes, people still need larger homes to be able to fit their families. What can we do to be able to provide that to the market even as the interest rates increased? So we rolled out a ton of floor plans. This is just a handful of the ones that we offered here in the Raleigh-Durham area. Everything from, 2,100 square feet, so going a little bit smaller to improve affordability, all the way up to our best-selling home, the Callan, at almost 4,000 square feet. But people ask, like, okay, so what did you do? How do you provide these at such a better cost than other floor plans? Well, what we did was we went in, and our architects and engineers figured out a way to build these homes just more efficiently. So what you'll see is you'll see less like walls, you'll see a little bit more open concept. You'll also see less, like some of our floor plans currently that we have will have like the living room will bump out, and then maybe you'll bump in where the kitchen is. We eliminated that and did it straight across back because that does allow for the affordability of the build to be better. So those are just some examples of how we were able to provide this. This is something that we did in order to not undercut the clients who had purchased previously, while still being able to provide the market with the affordable homes that they needed.
Perfect. And so obviously you guys are a huge part of this, and I think that is downplayed quite a bit with other builders. One of the reasons that we finished out the end of the year at a record finish, and we've had record-breaking sales, starts, closings all this year, specifically in the Raleigh-Durham area, is the specific brokers that we have partners with. So you guys are huge. So we just want to remind you of this, that we have our core broker program and the benefits that come along with that. And we'll talk more strategically with you if you'd like to have a one-off on how to become a core broker. But 75% of our home sales come from brokers like you guys. 50% of the registered clients from you guys actually purchased one of our homes. And then last year we paid over $7 million in broker commissions. Is that right? I think it's higher than that.
I think this was 2022 payouts.
Yeah, because I remember having a conversation with the VP of sales last year where they actually told us we could save $20 million and not pay out as high of commissions as what we're going to pay this year. But because these brokers are important to us, we are going to pay them, and we're going to spend the money because it's going to matter. And it mattered, and you guys showed up. So this is an aspect that builders tend to overlook a little bit, but it is very much a part of our puzzle and a huge part of what makes us successful. And so that is it for the presentation. So a flash again of our information where you can follow us on Instagram.